Silver is quite a bit the same. It's dipped down into this support level, these lows. It's had a technical bounce, and it is pointing to lower pricing. And when we look at silver and use the Fibonacci price pattern, silver had its initial drop, and then it's had its bounce, and it's working through this whole level. Now, there's some interesting levels here on silver. If we take a look, there's this 618 retracement. That's called the golden ratio. That is the sweet spot for Fibonacci theory. What it means is if price sells off and then has a bounce, it's naturally going to want to move to the 618 level, which it did right here. Typically, if you bounce off that level and pause, you're usually going to go down and hit the 100% level, which is this one mark. So around $40 per ounce. So this is the very critical level for silver. Silver really needs to hold 60 or like $61 per ounce. If it can hold that, the long-term bullish picture is pointing to more or less $75 silver, which would bring silver up to about 175. A very big gain from where it is. Well, yeah, I can show you what looks to be unfolding for gold. If we take a look at the chart, let me just pull that up. There's definitely a lot going on, a lot of emotions flying in the precious metal space. This is the daily chart of gold. Let's just zoom back. As you can see here, we did have that precipitous waterfall really started to, I think, test investors and precious metal holders of what is going on, and is gold going to break down and sell off in a big way? If we look at gold and just kind of look at these recent lows, we've got a lot of consolidation through here from late 2025. And then we had a wick low over here where we got into a huge waterfall sell-off, volume ramped up, and then we tested this low just about a week ago. And so this is a very big test. Now there's a couple of scenarios here. Obviously, right now gold is in a downtrend from a short-term standpoint. So if, as a short-term trader, gold is making a series of lower highs, it's making a series of lower lows, and it actually is still pointing to lower pricing. Now, the flip side of that, as a long-term investor, the long-term trend is actually bullish. We've got a very strong uptrend. It's consolidating, meaning it's pulling back in somewhat of a controlled manner, building what could be a launch pad, a bull flag pattern pointing to higher pricing. And so depending what gold does here, and silver is very much similar, there's a very big move pending. And so if we were to look at the bullish in this scenario for gold at this point, let's just go back to the ultimate kind of low that we saw back early in 2025. We saw the low in gold. I love to use a Fibonacci extension. This is based on Fibonacci theory, which is pretty much how the whole universe, the world, everything seems to function. Based on Fibonacci theory telling us the strength of a move.
Gold is currently trending downward, forming a sequence of lower highs and lower lows that suggest continued near-term bearish pressure. Traders focused on short-term price action see a market that remains vulnerable as momentum weakens. However, the broader long-term structure remains constructive, with gold still trading within a larger bullish cycle. The recent pullback resembles a consolidation phase rather than a full trend reversal, often described as a bull flag formation. Such patterns frequently emerge during strong uptrends, where temporary corrections help reset momentum before the next expansion phase, particularly in long-term, macro-driven commodity cycles.
To the upside, and then you can figure out how strong or how much the market pulled back to the downside. It tells us where the market naturally is going to want to go. So from a long-term super cycle of bull market in gold, if gold can hold these levels, we're going to see gold on the next major rally go up to about $8,600, which is pretty darn exciting. That is where this whole super cycle in gold is pointing to. One big final euphoric move. Probably something in the world is going to fall apart. Who knows? But there'll probably be a reason for gold rocketing up there at that point. Now, the flip side of that we need to be aware of is also the downside potential, which let's go and zoom in on this. This is what people need to be aware of. The downside potential using Fibonacci based on the most recent sell-off and the bounce that we've had. This tells us where the downside target is for gold. And that level here is about 3,600. So from where gold is right now, Elijah, we could see gold potentially take about a 15% haircut to that level. And that would actually be a bullish signal long term. A long term investor, if we see gold and silver come down to 36, this brings us back to a very unique situation, which is right before we saw gold and silver go into that euphoric kind of parabolic move late last year and early this year. And so the market is very efficient. Whoever got in late, if you weren't in metals and you got sucked into this excitement and you bought up here, the market is likely going to test you. It's going to try to shake you out and come back down and put you underwater or put you back to break even and make you want to get out of it. And then it will take off without you. And so the market is, based on the analysis here, is pointing to that's where it wants to naturally go.
Under a long-term bullish projection, gold remains positioned within a powerful supercycle that could extend well beyond recent expectations. Using Fibonacci extension analysis from a prior major low, some analysts identify a potential upside target near $8,600, provided key support levels continue to hold. This outlook assumes continued institutional demand and macroeconomic conditions that support safe haven flows into precious metals. Historically, similar extension phases have occurred during periods of monetary stress and heightened global uncertainty. If momentum reaccelerates, gold could enter a stronger advance characterized by broad investor participation and accelerating price momentum.
So I think there's some great opportunity in gold. I think there's potential for it to have a pullback to 3,600 still. Maybe this even happens over the next month or two, and then it rocket higher. But if gold holds these lows, this low that it put in over the past week, and starts to head higher, then we're probably going to 8,600. And there's actually a really interesting chart. If we go back and look at the weekly chart of the S&P 500. So this candlestick chart in the background, red and green, that's the S&P 500 weekly chart. The yellow line is the chart of gold. And what I want to show here is we're kind of going into this phase. The stock market is starting to ramp up. And I